What's good, YouTube family? It's your boy Charles Enoch. Y'all already know we back with another Invest in Myself episode. Now, if y'all don't know, your boy's a little bit under the weather, but y'all already know I'm married to the financial game. So through sickness or through health, y'all gonna learn today. So today we're going to be going over how to pay your mortgage using a home equity line of credit, or HELOC for short. But before I get into the topic, y'all already know I got to do my YouTube spiel. Your boy's getting close to getting monetized. So if you haven't done so yet, go ahead, smash that like button for a brother, make that thing turn blue. If you're new to the channel or you just haven't done so yet, go ahead, take a little time, hit that subscribe button for a brother. Help a brother out. All right, so now that we got that out the way, so every time I explain paying a loan off, or in this case, a mortgage, using a line of credit, everybody's so concerned about paying off the line of credit, even though paying down the line of credit is calculated in simple interest. This means you'll be able to pay it down quicker, and it will charge you less interest when you use the velocity banking method. So before we start the video, I'm gonna show you guys how to calculate simple interest on your HELOC and why you shouldn't be concerned about it. So like my last few videos, we'll be looking at the Payoff mortgage calculator. And if you don't know, this is on my Patreon page. So go ahead and support that page if you wish to. All right, so enough talking. Let's look at the example for today. Let's learn. All right, so before we get to the mortgage payoff calculator, like I promised, I'm going to show you just a simple way of how to calculate simple interest and why you shouldn't be concerned. So if we look right here, pretty much the equation to calculate simple interest, we're going to take the HELOC amount, we're going to times it by whatever percentage the HELOC is for the interest rate, and we're going to divide it by 12 since there's 12 months in a year. And this is going to be the interest per month. So we're going to say that we have a HELOC that is $25,000, and the percentage on a HELOC, we'll say that it's 4%. So what we're going to do for equation one, we're going to times 25,000 times 0.04, because that equals 4%. We'll divide that by 12, and we'll get $83.30 per month. And that's if we use the whole HELOC and we did not dump our income into the HELOC. That's just to say that for the whole month we borrowed $25,000 and we never replenished. If we put in, let's say, $5,000, then it would, per day, the interest rate would go down, or pretty much the calculation would go down because you have less that you owe. So look, we're going to go to example 2. So let's say that next month we only owe $20,000. So what we're going to do, we're going to do the 20,000 times 0.04, since it's 4%. We'll divide that by 12 months in a year. We're going to get $66.66 per month. So we see that the more that you're putting on the HELOC, the less that you're going to pay per month in interest. And this is where we use that velocity banking strategy, where if we're going to borrow, we're going to park, or we're going to put our income into the line of credit, into the HELOC, and then we're going to incrementally take it out for our expenses. So again, this is just a simple way of how to calculate simple interest. And we see if we borrowed $25,000 and we're only paying $83.30 per month on it back, that's very cheap. So we're going to go to the mortgage interest payoff calculator, and we're going to see why we want to chunk $25,000 onto the mortgage and see how much interest we saved, as opposed to how much interest we're going to be paying back on the home equity line of credit. All right, so we're at the mortgage payoff calculator. So the scenario, let's say there's a couple, and we're going to say their cash flow is $1,000. So after all income and expenses are paid, they have $1,000 left in cash flow. So pretty much let's go over the mortgage that they're going to have. They're going to have a mortgage of $300,000, interest rate, let's say 5%, 30-year mortgage. They pay 12 months worth of payments. So we can see over here, if they just made the regular payments for the whole 360 months, the total interest that they're going to be charged is $280,000 basically. So let's say that they have the HELOC, and the HELOC is going to be $25,000. Let's say that they're going to want to put $20,000 from their home equity line of credit. So they're going to borrow $20,000 out of the $25,000 that they have on the HELOC, and that's going to be their first payment. It's $20,000. So we see the interest rate 279. Let's put that in. You see that it goes down to 219,000. So with that $20,000 payment, we saved a total interest of $60,000. Now, if we do the equation in regards to the $20,000, remember it is $66.66 per month. Now, since we're going to be putting all the income in and taking it out, the leftover cash flow would be $1,000. So it would take them 20 months to pretty much get rid of the debt for the home equity line of credit that we borrowed. So what we're going to do is we're going to take $66, we're going to times that by 20, pretty much 20 months. And that equals a total interest of $1,320. That's it. We saved $60,000, and since we borrowed $20,000 from our home equity line of credit, we're only going to be paying $1,320 in interest, but we saved $60,000 on the loan. So this is why I say don't worry about getting the HELOC paid down, because they're charging you simple interest, and simple interest is very easy to get rid of. So let's do another example. Let's go down to month 21. There we go. So let's say that in month 21, after 20 months, they're able to fill up their home equity line of credit again, and they're going to be wanting to make another chunk payment. So we see the total interest is 219, right? So let's put 20,000 in there, and it goes down to 177. So that's about what, $43,000 saved in interest. And guess what? The interest that is going to be charged for the HELOC is only $66.66 per month. And again, we have to remember that every single month, since their cash flow is $1,000, they're not really going to be paying $66 every single month, because it will be $19,000 owed, then $18,000. It will slowly go down. So that $1,320 that we're talking about is actually less. So again, we saved about $100,000 just by using two chunks out of our HELOC, and we're pretty much just paying the bank pennies back compared to how much that we're saving. So again, don't be worried about using your HELOC and paying that back, because it's charging simple interest. With the amortized interest, it's a lot harder. We see that there's a lot more interest. You're almost paying as much as the home is worth in interest if you do not make these chunk payments. And this is what speeds up the process of paying down your mortgage. So I'm not going to go through every single one, but we do see that it is beneficial to borrow a line of credit, to borrow the bank's money, a home equity line of credit, put it on your mortgage, and then use the velocity banking process by putting your whole paycheck into the home equity line of credit, and then slowly drawing it out by paying your expenses. Whatever your cash flow is, you keep that in there, and that's what pays down the home equity line of credit. So I hope this was helpful for everybody. If you do have any questions, definitely hit up the comments. If you like that I'm doing it on the computer and you like the payoff calculator, definitely let me know if there's anything else that I can do. I really want to hit hard on mortgages because I see a lot of people buying homes, and I definitely want to help individuals out by using this velocity banking strategy and using the chunking strategy to get rid of your mortgage quickly, and you're not doing the 30 years to pay off of a mortgage. So if it was helpful, remember to smash that like button for me. And if you haven't done so yet, definitely subscribe to the channel. We are close to reaching 1,000 subscribers. So help a brother out. Like always, you guys have a good weekend. We'll be back with another Invest in Myself episode next week. Peace out.